Good morning, YouTube. Happy Tuesday. I'm Grady on the charts. It's good to see you guys again. Please like and subscribe. I hope that this trading entertainment has been as good for you as it has been for me. Thank you very much for all of your support, and thank you very much for just tuning in one more time to check this out. So let's go ahead and get started with our warm up. As you can tell, my voice just needs a little bit of a little bit of something. So we definitely have to warm up your your chops so I can be able to communicate more effectively. We want to match our eyes with our mouth. We want to match our eyes with our brain. We want to see and interpret as quickly as we possibly can. We're going to go down to eight gray geese and green field grazing. Eight gray geese, eight gray geese and a green gray. Mm. Eight gray geese and a green field grazing. There we go. Fine white vinegar with veal. The free thugs get three thugs free. Makes no sense. Let's try it again. Fine white vinegar with veal. The free thugs set three thugs free. Okay. Fine white vinegar with veal. The free thugs set three thugs free. There we go. The three thugs set three thugs free. Mm, okay. The free thugs set three thugs free. Okay, I feel that. I feel that. I feel that. Okay. Grab the groundhog from the glazed grass. Green grease. Ooh, wow. We'll try that again. Grab the groundhog from the glazed grass. Gray geese in a green field grazing. Okay. Are we focusing on the words and the letters to make the words, right? Are we focusing on that to make the sentences? Gray geese in a green field grazing. High roller, low roller, low roller, lower roller. How can a clam cram in a clean cream can? How can a clam cram in a clean cream can? Inexplicably mimicking him hiccuping. I wish to wash my Irish wristwatch. I wish to wash my Irish. You guys don't understand that there are parts of my brain flaring up right now that I did not realize were still asleep. You should try this. You really should. Before you really want to get into anything complicated, check your brain to see if your brain has been warmed up. Are you actually in the physical world, right? Are you actually looking at the screen? Are you literally seeing monkeys make Monopoly monotonous? The next nest will net. It will not. The next nest will not necessarily be next to nothing. All right. Okay. Little bit of warm up. Eye, brain, mouth. Are we ready? Let's try. Let's give it a shot. Let's give it a shot. So we're gonna hop over here to our economic news. We're gonna hop over to economic news. Today we have core inflation. We have inflation rate month over month. And as we can see here on the screen that we had forecast for core inflation of 2%, of 0.2%. We came right in as we had forecast. The same with the core inflation rate year over year for April. We came in at 2.8%. Inflation rate month over month was 0.2%. That's down from 0.3% expectation. And last year's, and the previous, well, actually previously, we were down negative 0.1%. So we're actually doing better. Inflation rate year over year, 2.3%, as opposed to previous 2.4%. All right, so you may be asking yourself, what is core inflation rate? Core inflation, sorry, there we go. United States core inflation rate month over month. Core inflation prices in the US, which exclude food and energy, rose by 0.2% from the previous month in April of 2025 from the 0.1% increase in the previous month, slightly below market expectations of 0.3% increase. Prices rose for household furnishings and operations, medical care, and motor vehicle insurance, education, and personal care. On the other hand, consumer costs fell for airline fares, used car and trucks, communication, and apparel. Uh-huh. Okay. So that's our core inflation. That's what core inflation represents. If you guys don't know about some of this information, there are plenty of resources online where we can find this information out at our own time. And many of these sources are more than happy to share this information with us so that we can be, more fiscally educated. And that was just my community service vibe right there for today. That's all I wanted to say about that. Okay, so now it is 9:29, 18 seconds. We have core inflation. We had a nice move up from yesterday's position. We'll take a look on the 1 minute chart. Quick look at it. We had a very short day yesterday. We were positioned ahead of the open, and we had an opportunity to get short yesterday. We're in a similar area today, but I don't think our expectations are that straightforward today. This level really doesn't represent much. We have a lot of the same areas that we traded to yesterday. This is yesterday's open, and we broke down. This is the PM session. We ran just above that before we went into the evening. Then we had the Asian range, London session, and then we moved into the pre-market just now, just prior to today's open. Excuse me. So the market is open. It's 9:30 a.m. EST, 8:30 a.m. Central. And so the market just opened. The inflation news and data came in pretty much in alignment with what we expected. So it wasn't anything that we believe that we really should believe should throw the market out of whack. So that's a very good thing. So we should see normal price as normal as it has been lately, but we should see price pretty much perform in a consistent format. Here we are off the open. I'm going to zoom out because I really kind of I'm going to zoom out because I want to get a bigger picture of everything that's going on. We took out yesterday's high. We had relative equal highs at 20,995. That's this level, 20,995. So to the left, we just broke above relative equal highs, which was the pre-market high for the pre-market Monday, and then the close here, the afternoon session. These two highs together make relative equal highs. We just broke up above that level on the CPI and inflation rate news. But then we turned over and just dropped down below that level just a little bit. So I'm not saying that I think that we're going to go up or down from here. Right now, I'm watching the opening range. And I'm also being a little more defensive and a little cautious. In the last couple of days, I've had fairly successful days for me, right? Some days that I'm really kind of happy about as far as my profitability and my risk to reward. So I've had several trades that had very good risk to reward lately, and I am cautious of overconfidence right now. I'm cautious that I could enter the market with a very confident thought process or overconfident thought process, not very confident, but an overconfident thought process. And I'm watching myself because I don't want to put myself into a situation believing, um, you know, just not seeing the data because my confidence level is jacked up. And sometimes all it takes is a little bit of success to throw us off of our game. So I think it's just one of those things where it's just extremely important that I reel myself in today. I had an opportunity one time. So one day, came to the market after doing well, and I literally said to myself, "Oh, I want to make this a short day, right? I want to get in, get up, and get out." Mm. That was one of the worst trading days that I had. Excuse me. That was one of the worst trading days. Now, what I don't like about today is this. In the pre-market, we moved away from the Asian session high and we moved away from the Asian session low. We traded both of those levels. So after the Asian session high was established, we broke down, and then the London session was in the discount of the Asian session. It ran the Asian session low, but it did not take out the it ran in below the Asian session low. But there was a low below that it didn't take out. If that makes sense, right? So we took out the Asian session low, but below that low was another low that we did not take out. So the London session was nested inside of that range. From that level, we started to move back up, and then we took out yesterday's high. Now that we've taken out yesterday's high and we're up above all those levels, what I don't like is that we're not in close proximity to any of the other levels. The only level that we are in proximity to right now, we've had any proximity to, is probably the PM session from yesterday, right? So the afternoon session. Afternoon session, we can pull back to around 13:30, and I think we'll pull that forward to roughly here. I think that's good enough. Encompassing this and that and PM session. Okay, here we are. Pull it back to here. All right, so this is our PM session high here. The high of the previous day and the PM session high are the same level. Once we ran the PM session high, we see what we were able to. You almost got me. All right, so we just dipped down below the PM session high once, twice, three times. The fourth time, we took out all of the prior dips, and then we rallied higher. So where do I think we're going, or where do I think we could go? Oh, excuse me. That's to be determined, I'm assuming. That's my strong assumption. Off the open, we have this imbalance between this candle, which happens at 9:30. We'll bring at regular trading hours. It's formed this imbalance. Pull that forward. Mm, 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 mm. Here's the range between yesterday's close and yesterday's open. We drop down to the middle of that range. That looks like a 50% retracement of that total range. That was really all that we kind of needed. It wasn't really much of a move down, but that's exactly all we needed really to have a move to the upside. I'm not eager to get involved in any way because it's this, and I hate to call it like this, but it's like this spire, right? This tower that's sticking out, and above it, I have no idea how far it could possibly go. There are several levels that I am mindful of, been made aware of. 21,170, aware of that. I'm also keeping in mind 21,099. Mm, 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 mm. 5 minute time frame has a very long wick on the top, 1 minute 51 seconds. Relative equal highs at these candles. We've been trading for 8 minutes now, and in this first 8 minutes, I am yeah, you know what I mean. And I want to say this is one of the strangest jobs. This is a strange job. This is a strange job. Oh my goodness. Very strange job. Hmm. My most significant level that I really like, we're nowhere near. Like New York Open, the midnight price. Nowhere near that. Everything that we saw there traded in the pre-market. So if you were trading London session or you're trading coming out of London, then yeah, you're pushing to the upside, you're moving, you're on side at this point. One of the things that I did notice before the market opened, and I was making just a small note of this to myself, was what? Excuse me, before the news. It was definitely before the news. And I thought I put this back on electronic trading. It was just this gradual push to the upside. Every time we moved and we came back in, it was just this constant move up, drop back in, move up, drop back in, move up, drop back in. This level on news drops down to this gap prior to the pre-market. We just ran the data high. So this is the high that the news candle gave us. Just ran that level. Oop. And then this is the data low. This is the low of the candle, the data candle here. Boop. And sometimes we'll have reactions off these levels. So I just want to watch for a moment to see if there are any. 9:40 a.m. Mhm. When they say that we have news, think all of the time when they say that we have news, I know personally have the idea that there's going to be some type of explosive price actions, flailing back and forth. And I think that stems from the comparison from that's from the comparison between news events like non-farm payroll and FOMC, and then the other news events. The other news events are red folder or they're high impact news, except their impact is less. Their impact is less um, volatile and could also have longer ranges. Less volatile, but longer ranges. And I think that's one of those things that when you're trading, it just takes a while to kind of navigate between those two. We came right back into that data high right here. You see how we turned right over and came right back into it? The high of that data candle. It's 9:42 a.m. What am I looking for? Am I looking for price to drop right back in and by 10 a.m. trade off of the 15-minute down close candle for a move higher? The first presented gap that we have here, the first gap in price that we've seen today is here, right down here on the 15 minute. This is 15 second. I'm gonna just jump on the 15-minute really fast. Boom. There is a down close candle resting right there at that range. And here we are, we're coming right back in at 9:43 a.m. Okay. So what are we really going to be looking for? Are we looking for interaction with this level at 10 a.m., 9:50? as the um as the macro, or are we looking for interaction with this level at 10 a.m. for stronger moves to the upside? Ooh, that's interesting. Why? And then there's a third option. What if we invert this gap, right? What if there's an inversion in this gap? We drop down, touch this level, then hop up, roll through it, move lower, and then go see the data lows, right? Because we've taken the high on this candle. This candle, back and forth. Very interesting. It's a very interesting proposition. Let's see if we continue higher as well. I mean, so there's like there really are multiple guesses that a person could have. And a lot of times we think all of these things, like which one of these options are we experiencing right now? Which one of these situations are we experiencing? And I know what I don't want to see. Oh man. I know what I don't want to see. I don't want to see these 15-minute candles consolidate back and forth over and over. New 15-minute candle at the data high, drop back in slightly. The first move we had was up on the 15-minute candle. Now 45 a.m. Macro is going to begin in a few minutes. The transition between these two 15-minute candles is very important. However, this is the last 15-minute candle of the hour. And that means that this is going to set up close of this current hour. So, however this hour performed, this candle is going to begin the setup process to close out the hour. Now, the junction between the two hourly candles is going to become our new interest, our new point of interest. How the next hourly candle is going to trade down into the previous hourly candle, or how it's going to trade up above or up into the previous hourly candle's wick, and then make its move in any other direction, in whatever direction it decides. Now, what could be really exciting is in the next 15 minutes that this candle literally goes down and closes below our prior candle's open price, which would be down below yesterday's PM session high. And that kind of price action was kind of what we were looking for and expecting. So we're looking at today's PM session high. Today's PM session high is just below the opening price of this current hourly candle, which is true, but it makes little sense, but it's actually true. So last hour close here. We're looking at 9 a.m. is here. Now, in the hour, which we consolidated for most of that hour, at the end of that hour, we rallied and we took out the data high. So coming down back to any of these levels or coming back down to this level is returning to the opening price of the current candle. Well, that means that just below this, we would immediately go into a down close candle and would become a bearish candle, closing below the closing price of the prior up close candle, which is a interesting position to be in at the exchange of the hour. There are 11 minutes left in this candle. And we're in a shorter time frame, lower time frame consolidation. Oh, we're in a lower time frame consolidation. It's almost time for me to get a new mic. I can hear it sometimes on the recording. As I say certain things, it just pops out. Bah, 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 bah. And I think that's actually a really good thing. because sometimes you'll have equipment and you won't use it, right? And you won't put it to use, and you've spent money on it, and then you get to a point where you've used it so much that it's it starts to putter out on you, and the same you have the same experience. None of you going to tell me that that was a 2-minute candle, huh? And that this little first presentation, snola bobble boom bom bom, had not even been touched. These two little overlapping candles. All right, we're below PM session high from you. No, we're below the data candle high. Tempted, tempted to put it on a small position here to see, strangely enough, and I'm going to use these terms exactly, to see if I will get lucky. And that's not a reason to put on a trade. Let me see if I get lucky. 9:50 a.m. is the beginning of the macro. The first thing we do is we move up to that data high, move very close to it and touch it. Let's see if we go through it. There are how many minutes? 9 minutes. 9 minutes left in this hour. 9 minutes left in the 15-minute candle here at this high. We dropped down it. We dropped into the body of the previous hour with a nice little wick, and everything below the red line here is a wick. I'm interpreting and misinterpreting a little bit of something going on here because oh, that's a 15-minute candle. Let's keep it clear. Keep it clear. 15-minute candle. Okay. The opening price of our current 15-minute candle is just above this data high level. So we just slid down into the body of the previous 15-minute candle. We put a wick in, and then just before the hour closes, we rally on at 9:50. Oh, I had an opportunity to listen to a weekend town hall session with ICT and a lot of other traders, and I really was attempting to compare myself with their level of astuteness. Because I know when I get on the chart, sometimes I'm saying stuff like, and I want to tell you, hey, do not let that embarrass you. Because I don't think that when it comes to trading, when it comes to trading, we're looking for consistency and profitability. Enjoy as human beings impressing each other with our delivery or our showmanship, right? But I think ultimately one of the best things about trading is the element that provides us with the ability to provide for our families and pay our bills. And when we start looking at other things and looking at it in a different way, and we start saying to ourselves that, I want to be a guru, or I want to be known as this type of I want to be known as the smartest trader, or I want to be known as the most eloquent of the traders. You're not trading. That's not trading. That's something different. That's a different element of the community, and it's a different element of the industry. But it's not a significant element of the of trading itself, unless your ability, your inability to articulate your strategy or some element of what you're doing represents your confusion about that strategy, right? So if you're looking at an order block and you're saying, man, you see these up close candles or whatever, and this is encouragement for people who are as new as I am. That's it is what it is. If you see two consecutive down closed candles, call it two down closed candles side by side. Whatever you need to call it at first. As time goes on and you begin to refine your understanding, sure, grow, sure, change, sure, adapt a new vocabulary, right? Because this trading in and of itself, and I heard another trader say this, it's a language in and of itself where people outside of this industry and outside of this group, and it doesn't matter if you're trading supply and resistance, or if you plan trading orb, or you're trading ICT, SMC. It doesn't matter what you're trading. People outside of this industry have no idea what we're saying. They don't know. They have no idea what we're saying. So we were speaking another language, period. Now, if you want to become more fluent in it so that you can communicate to other people your experience, keep working. And I will definitely keep working. You see, I start my trading every day, attempting to improve my ability to just articulate clearly. Because one thing I would like to be, or like to convey to people, is sometimes the reason you can't understand a thing is because you can't be understood. The reason you're confused, or the reason you can't understand, or the reason every time you have an interaction with other people, there's always confusion and there's always a disconnect, is because you can't even understand yourself. This should be about trading. But I think I think that's exactly what I'm trying to say. That's what I don't think that's what I'm trying to say. That's what I'm trying to say. Is that sometimes we experience confusion in life and frustration in life because we can't understand ourselves. As we communicate to ourselves, self-talk, right? Imagine if you were using the wrong words to express a feeling because you didn't know the word that you were really reaching for. I'm tired, or I'm hungry, or I'm frustrated. And then what you're really reaching for is I hate, or I don't like, or right? Or I'm irritated, you know, on physical level, not on an emotional level. But you can't communicate those two things differently. If you can't, then you yourself go down a mental and a psychological road based on the vocabulary that you're using, because you can't even understand yourself. I'm gonna stop that part right there because we're talking about trading. So when we're looking at the screen, excuse me, and I'm sitting here now, I'm just watching price move up, and we're moving up and up and up toward 10 a.m. And my expectation is really measured right now, and it's strung out between 2 points of um, two outcomes. The first outcome is that I'll sit here and on this news I'll watch price go up and up all day long, and I'll miss every move, and I'll sit and I'll wait for a pullback, or I'll wait for price to have a market structure shift that could possibly serve to send us down. And I'll sit here looking and looking and looking, and then I won't see it. Or we will at 10:30 or 11:30 or 12 come to a halt on this vertical movement and have a bit of a pullback. Now, in the pullback, I don't know if I'm expecting a higher time frame pullback, or if I'm expecting a shorter term pullback to a bullish order block that would send us higher for the rest of the day. I haven't seen anything like that yet that looks familiar, that would suggest to me that that's what I'm looking at. Now, for those of you who can see it, very, very good. Very good for you. Good for you. But again, if I can't see it, I'm not attempting to create a trade. I'm not attempting to create a trade. I'm not attempting to manufacture a trade. There's 1 minute and 30 seconds left in this hour. I'm not attempting to manufacture a trade for the sake of putting on a trade. And that was some things those are some things that I've been meditating about over the weekend, really concentrating on. Um, Trading for profit or trading for the stream. Those are two different things. I know this is trading entertainment. This is definitely trading entertainment. But hopefully, something that would also entertain you is a person who says, "Look, get control of yourself. Get control of yourself for a trader should be one of those things that we just, we fist pump. Oh, control of yourself. We're not trading. We're trading for funds, not for fun, as they say. But being successful is one of those things that's an acquired taste, and that's something that it took me a long time to understand. Because being successful often does not include fun, right? Being successful doesn't often include fun. Sometimes, in order to be successful, the first thing we exclude is fun, so that we can get to work, we can get to business, we can take care of what we need to take care of, right? But everybody who's ever had even one paycheck knows that when that check leaves their hand or their account, and it's in your hand or in your account, that part is fun. That's the part that we want to see happen more and more because it's just, you know, good job. It's that thing. However, there's a delayed gratification that we experience here in trading. It's delayed. It is delayed. And it is delayed by these smaller victories that don't include pats on the back or include financial exchange. And one of those things, and it's one of those things, and it was gut wrenching for me because I realized that was something that I was going to have to grow to experience. If you watch ICT's video posted on February the 10th, 2025. No, sorry. What's today? The 13th? February the 12th, 2025. If you watch the ICT's video posted February 12th, sorry. May 12th. What is happening? I'm looking at the chart and I'm trying to remember something else. But uh yeah, yesterday. Today is May the 13th. Yesterday was May the 12th. Monday, May the 12th. He was in a trade that I think began at 11 a.m. and then he took profit at 3 p.m. And that's one of those things that personally it was gut wrenching for me to acknowledge that, oh yeah, success, success, success. But it was also an condition of watching the day play out, up and down, back and forth, over and over. And I'm not sure that he sat there and watched every tick of the chart, or if he put it on and when it moved away from his stop loss, he just, he moved the stop loss to break even, and then he went and, you know, petted his dog or something. It was just one of those things where for us as new traders, you know, we're watching this thing tick back and forth, and then we're dealing with ourselves for that period of time. And I've tried it. I've tried it recently. Putting on a trade, watching it go into profit, moving to break even, and then going away from the chart. Because when your entry is proper and you're entering at logical levels, abandoning your trade is not what I'm suggesting. What I'm suggesting is not touching a trade and letting it do what it's going to do because our interference with trades takes us out of some wonderful positions that the only thing that we really needed to do was manage at a distance. Let it go back and forth, let it come back up to the lower gap, let it come back up to the wick or the lower that order block, or let it move, let it breathe, and then allowing ourselves space to have that emotional capital for the next entry or for the next time. And this price is this vertical rocket ship right off the open. I didn't participate, and I am okay. And I'm very okay because it's 10 a.m. now, and I was expecting to see us hit our silver bullet around that 10 a.m. level. but we are in a vertical climb. Air traffic control, we're in a vertical climb. We're in a vertical climb right now, and there's really has been no area well, there's been plenty of pullbacks and areas to get involved, but not at any level that I said to myself, "Oh yeah, I want to be a part of." I just basically just let it go. On the ES, it's a little bit cleaner on the ES. On the ES, there is a presented fair value gap at around 5,872, and we dipped right into that gap at about 9:37 a.m. and we've been moving it from that level. It's not on the Nasdaq. It's not like that on the Nasdaq. At 9:37, 937. Ooh, ooh, huh. Look at that. Look at that. 937. We drop right down here. Hit constant encroachment of that gap. I have it marked out. But I have this marked as the first presented on the Nasdaq, and this is like the second presented on the NQ, and then it moved up from that area, consolidated for a period of time, and then we moved up and moved out. Yeah, that's good. That's good. Again, personally, I am happy about that. Why? Because I've had some consistency, I've had some profitability, and I should not be in a hurry to give my money back to the market. Sometimes I have to sit back and then watch the game play out in front of me, especially this early on in the day on news. This area happened where this red level is the data high. We came to that spot, rejected into this gap, moved above it, dropped down into it. None of these bodies closed below this down close candle, although we put wicks into it. Bullish order block, then we moved away. And another reason I didn't like it is here we are at 10 a.m. Did not like that. At 10 a.m., that's the area where I initially really began to hunt entries. And prior to that, oh, excuse me. Prior to that, I wasn't really interested in trying to just get involved in the first thing that I saw. I didn't believe it was going to be long lived. And the reason is because having trades immediately off the open that go one direction is I want to say, man, look, this is a massive guess, massive guess. I want to say it's about 20% of the time, 20% or less. Most of the time, we have open and range volatility, and it does that until the first 30 minutes is complete, and then there's delivery. Yep. I was just thinking about another trading something 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 9:35. Where's 9:45? 9:45. Shooby-dooby, 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 boom. Boom, 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 boom. Pray. There's a new week opening gap that's began on Monday, March the 3rd, 2025. We are approaching consequent encroachment of that gap. It's a new week opening gap. March the 3rd, 2025. Today is what? Today is March, April, May. This is May the 13th. All right, this is a little more than 30 days ago this gap was formed. Let's see if there's some significance. This is an opening week, new week opening gap. We're nearing consequent encroachment. Blah 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 blum bum blum blah 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 blum bum blum. Mm, 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 mm. Overall, the first thing that I'm thinking is if we had a move to the downside, where would that move go to? The first thing I'm thinking is there's this imbalance here at around 21,098, right? So this gap, but in the total range from high to low, do I think that we could come all the way back in and have a 50% retracement of the total range high to low? Maybe a return to the PM session high, right? Maybe something a little bit lower than that. But whatever's happening, it seems to be happening right now as I'm discussing this. We did not quite get to the consequent encroaching of that new week opening gap. We just fell just shy of it before we turned over and started moving to the downside. No, no, I mean before we turned over. Started moving to the downside is premature. It's premature because we would need to see a market structure shift first, which would mean that personally, I'm looking for a series of these down close candles to provide me with some direction. Series one, pullback, lower than the first few pullbacks. Series two, a run to the downside, taking out the lows of those prior down close candles. Series three, a fail to make a new high, right? Because every once in a while we will see price run to a level, particularly if we just hit an order block and reject from that order block violently, right? Just yeah, bing. There's a little bit of a busy, and until this close, it's not truly a sibby. The main thing that I'm noticing is that the buy of this candle is here. It's low in this range of these two candles. However, we didn't take out anything. There's a small, let's see, right here, small gap right here between that low there, and there. Pull that forward. We just kind of hit the premium there, and we pop right back up. And again, it's 10:11 a.m., right? It's 10:11 a.m. So we may roll into a consolidation. And the consolidation that I would expect would be maybe 4 or 5 15-minute candles as we trade in and around and through this area. We have 47 minutes left in this hour. Mm, 10 a.m. level is kind of getting in my way. It's hard for me to see. You know what? It's not difficult to be patient when you know exactly what you're waiting for. When you know exactly what you're waiting for, it's not difficult to be patient. It's difficult to be patient when you have no expectation or no recognition of what you're looking for transpiring. Like the small little trade that we saw on the ES that we really kind of ironed out on the NQ. We saw the trade develop in hindsight, and we saw a nice trade to it, very clean, not an extensive consolidation, and then a very nice delivery to the point we are right now. Okay, yeah, that's good. That's very, very good. And if we're waiting for that and we can recognize that that's a possibility or that's the type of market structure or price structure that we should be looking for, then waiting for that, yeah, I'm sure we can wait quite a bit of time. As price moves to the consequent encroachment of this new week opening gap, I'm looking to see what type of reaction we have. What do you mean? Okay, we just got to it. We just went through it. Now, what now what we're looking for is, will we have consolidation? Right? Will we consolidate in this area, or will we just push through this area and continue higher? Okay, 35 seconds left in the 15-minute candle. Now we're going to see if we can give this hourly candle some character, right? We not so one-sided, right? We want to see some dimension to this thing. We are pushed all the way through consequent encroachment of that new week opening gap, and we are within about 25% of the high of that overall gap. I believe this gap also resides in a SIBI to the left on a higher time frame, maybe on the daily chart or the 4-hour chart. Mm. While I'm speaking, I have to yawn like 300 times, and I know it's not physical fatigue. I really think it's maybe my brain calling for oxygen. Mm, mm, mm. Maybe. Oh, in your nose, out your mouth. Breathe. What time is it? In 16? Mm. The last couple of weeks, you know, I've been attempting to catch the very high edge of the highest wick in the downturns. And it hasn't been that. That's not what it's been. I would say, oh, and it has not been that very, you know, top 50% of the highest wick. Boom, pressed all the way up, all the way through. We're at consequent encroachment of the gap outlined. Do, 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 do. Okay, let's go ahead and bring some of this into focus. So we moved away from that very quickly. Parabolic price action is crazy. That's crazy. Okay, 1218. Ja, bop, 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 bop. Bop, 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 bop. All right, 3, 2, 1 on the ES. New candle opens. You bum, 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 bum. We're at consequent encroachment of this gap outlined yesterday. We just turned over and tapped the consequent encroachment level. 10:18 a.m. It's just an odd time of day. It's a weird time of day, right? In the middle of the hour, the first 20 minutes of the hour just transpired. In the middle of the hour. What do we have going on? 15 seconds shows a small little move to the downside. Now, show of hands. Who has a predetermined idea of what the market structure shift would look like? As we came into the high on the 15-second chart and price began to fade like that, I got excited. I got excited. I said to myself, oh boy, oh boy, oh boy, oh boy, ooh, 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 ooh. New 5 minute candle has just opened. We dropped down below the opening price of the prior 5 minute up close candle. The relationship between these two candles in on the 5 minute often give me a little more insight. We opened up with a tiny little wick to the upside and then we dropped down. That opening price of the 5 minute candle in a scenario like this, do I want to put a feeler out there to see? I am going to. Now on the 5 minute, the 5 minute drop down into this prior up close candle. And I could be premature, which means it could turn over just because it's just a wick, especially once we get to this intersection. It would just be a wick, right? And I think that's what I have. I'm exiting here. It's just a wick. Even if it's not, even if it's not, the time of day, 10:21, right? It's such a weird time of day. 10:21 is the exchange of the 5 minute candle and the other and the it's a 5 minute candle exchange. But it's not the 15-minute candle exchange. On the 15-minute chart, we popped up above the prior up close 15-minute candle and we ran up. And so I'm gonna mark that out with Fibonacci because there is a Fibonacci relationship between these levels. If you don't believe me, go and look at any chart that you have, and when you see price change, there's a Fibonacci relationship between all of the levels. So I'm using the close of the prior up close candle and where we traded to. There's 87, 79, 70. We dropped all the way through the 50% level. Here's the 25% of the prior up close wick. The only thing that we didn't touch was this 50% level here. That area was the only level. So as we started coming down, especially on the 15-second chart, then we ran up above the 25% level, dropped back in. The only level that we didn't touch was boom, that. We might need to touch the 62%. But again, it's a strange time frame for us to operate in 1022 or so. The red level represents the 5 minute close of that up close candle. As price begins to decline, then we'll begin to see the opening price of up close candles and its close being respected by price. We see that on the ES already. We traded to the low of that prior up close candle on the ES. Now we're sitting here. It's a bit of a divergence. And I'm going to just tap this one too, so we can see what the ES looks like at the same time. And what I'm referring to is this, and this is what I'm looking at. This is what I'm looking at. I'm looking at how price came right up to the close of that 1 minute candle and just touched that low precisely. So when I start seeing those signals, those signatures, then that's when I start to say, okay, it looks like price might be right moving to the downside at this point. But there still seems to be some indecision about which way it would go right now. Now, for me, I haven't committed to knowledge what this type of price environment requires, right? So it's not memory, but I haven't committed it to knowledge where I could say, yeah, I've traded it both ways, and 90% of the time, this is my experience, and 80% of the time, this is my experience. So because of that, I'm decided not to trade it. I decided to wait. Okay. Now we respected that level once. We moved up and rolled over. Ah, okay, wait. What am I seeing and not seeing? I'm seeing it, but I'm not seeing it. I'm seeing it, but I'm not seeing it. This is what I'm seeing, but I'm not seeing. Let's say this low and this low on the NASDAQ looks like this, and on the ES it looks like this. That's what I'm seeing and not seeing. This measurement is the closing price of the prior up close 15-minute candle. Everything above this is that prior up close wick. Price falls down inside of the prior up close 15-minute wick back to the closing price of the prior candle. We pop up, trade back in. Now we've run back up the length of the prior up close candle, where our current candle's price, our current price is at the 70% of that total range of that prior up close wick. If you would want to call it OTE, it would be OTE of the prior up close wick. Then we turn over, we drop back down to 50% of the total length of that wick. With 2 minutes and 50 seconds left in that 15-minute candle, we're holding it. We're just holding it. Hmm. Watching here on the 15-second chart. So this is half of the length of the prior up close wick. Somewhat of a gap. This up close candle just didn't close above this up close candle. The wick of this down close candle did not reach the high of this up close candle. Now we're below 50% of that wick, trading back up to it. Mm. And we're just doing this as an exercise right now because we're just waiting. We're just waiting. We're just waiting. We're just waiting. Turn over, drop back in. Good, 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 good. And I think one of the best things about trading is always going to be relationship. Right. So there's a higher time frame relationship, there's a lower time frame relationship. And then if we can keep those in mind and keep those relationships in their perspectives to each other, then that helps us much, much more. I'm watching the ES at the same time as I'm watching the NASDAQ. And I see on the ES, we've decided not to take that high right now, but we decided to roll over and drop down into this down close candle. Mm, 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 mm. Okay, 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 Mike. Come on, let's see. Now again, on the 5 minute time frame, two 5 minute candles have failed to close above this up close candle so far. But we still have 35 seconds. Yeah, yeah. We have 35 seconds, but we two up close, two 5 minute candles have failed really to break above that. This one did, but it looks like a down close candle or it's a flat candle. This is a down close candle that opened above this level, then it turned over and dropped back in. And in the last 12 seconds, then it decided to descend. We're watching that relationship on the ES as it fails to take that high, rolls over. Let's see, we just closed down below this up close candle on the ES, pretty much a flat close on the NASDAQ. Because of the 5 minute time frame, I'm more inclined to try to discover what's going to happen now. I'm going to move the red line down to represent the close of the 15 minute candle, of the 15 minute candle. Mm, 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 mm. Time is 10:30. Oh, I hate this part. At 10:30, we drop into this gap right here. At 10:30, we drop down into this gap right here. Now, we would think, this is what my normal thinking is. My normal thinking is we've been going up all day. We've been going up all day, right? It's for the turn to go down. And then at 10:30, it drops into this imbalance, which just turns out just to be a normal retracement, right? What do you mean? You see this low right here? I'll take this trash and I'll move it like this. Bam, bam, bam. So we have a move into the gap. This low drops in and takes out that low, and then pulls back aggressively, closes above this tiny little candle. And again, it's not in an area where I would have chosen to make an entry. It's a small consolidation just below consequent encroachment of this imbalance. And discount high of that gap. This wick drops down into discount low of this imbalance between the consequent encroachment and the low. So it could possibly just be a continuation to the upside. Um, put a small little feeler trade out there to see if I can get involved. But but what am I thinking? I'm thinking we have range on this. We have a range. How much more range is there? Brady, it could go up for the rest of your life. It could, right? It could. It could just continue to go up. Who knows how long? But in reality, we know that there's going to be pullbacks, there's going to be market structure shifts occurring at some time and at some point. The entire beginning of the day of Tuesday, May 13th, it's been going in one direction. How many days have we seen where it just did not stop? It just pulled back and continued. This year alone, maybe 10, 15, 20, where it's just like, oh, okay, yeah. And what I would normally be doing is I would normally be attempting to short every pullback, looking for the reversal, and it just keeps going higher. And it'll keep going higher and it keeps going higher. So yeah, as price turns over, drops down, hits the body of this down close candle and pops up, I'm on my hands right now. And it makes for terrible YouTube, but it also prevents me from setting myself back um more aggressively than I'm making money, right? I'd be spending more than I'm earning. On the ES, wow, that slant still is strong. That's still a strong slant on the ES. Let's see which one wins out here. I don't want to take a look. We just popped the high, the closing price of that 5 minute on the ES. If the ES is weak and it starts to roll over, I wonder what that would mean for us as far as the Nasdaq is concerned. Will it just pop up aggressively, hit some of these levels, and then roll over, or what? But again, as we see, we are sideways. We're sideways at this point. This is kind of what we expected. We didn't expect rapid resolution. We expected to push to a particular level, and of course, we're going to give it a swing high or a swing low. Yep, we're going to do that, and then we're going to deliver to. Then we're going to deliver. Consolidation. Remember, this entire wick is still that 15-minute wick of that prior up close candle from 2 candles ago. This wick touches the 79% level exactly. This one doesn't close on 62. This one runs to near 62, but that's like 50% between those two levels. This one is right at the 50% level of the 15-minute wick combination. It's a wick combination, if that makes sense. It's like the combined level of the last two wicks. And again, I'm just looking at the relationship that they're having. The way that their price is just declining through the Fibonacci. Every time we run higher, we'll run to this level. This is the 50% level of that range. Well, do you think that it's enough? Do you think that it's enough to make you take a trade? Not really. I would take a trade if I wanted to really get short. I'll tell you where I'd take a trade. This is where I would take a trade if I really wanted to get short. It would be right here. It would be just below 50% between 70 and 62. That's where I would take my trade. My stop loss would be here. My TP would be, I mean, we need really literally to see if we can get down to the next down close candle. About right there. And that's where my trade would be. I wouldn't want to see us run that high. I would want to see us get up near that high. I wouldn't want to give back more than $200. And because we tapped so many of these levels and pulled back, and the way that the ES is looking, I would like to see one more pop to the upside, maybe to on the ES, maybe to take out any of these highs, and then get us involved, and then get us to go into the downside. Mm, 6 minutes left in the 15-minute candle. Okay. 59 seconds left in the 5 minute candle. Mm, 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 mm. We already traded that level. I think I made a mistake. I think this is it. I think this is it. Look, we're not even breaking above that up close candle. We didn't even break above that up close candle. See how we're respecting this up close candle on the ES? The high of this candle is being respected. I'm bringing it to attention because I want to say is the psychology of this game is crazy. You start telling yourself these stories, and then the market starts showing you similar stories. Like you could be right, buddy. Then we take out this low. No, we're respecting the body of this low candle too. That's the one that's more significant. Why? Because we're more precise. Now it's a 50-50 scenario. Mm-mm. Looking for a brief rally. I mean, and it could push all the way through, right? Could push all the way through. And if it does, that's unfortunate. But if it goes without us, oh, I'm gonna tell you, you're gonna see me cry right here because I'm saying to myself, I'm right here, buddy. Come on, invite me to the party. Please don't go with me without me. Please don't go without me. Invite me to the party, baby. 10:40. 10:40. Please invite me to the party. I'm right here. I'm right here. I'm knocking at the door. I'm right here. I'm right here. Don't take me with you, buddy. Right here. You saw me. That was a very conservative entry. Yeah. Da, 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 3 minutes left in the 15-minute chart. Because we're so close to the end of this 15-minute candle, I would not like to see us come back up and get me into this trade. I don't want to see a 15-minute that bullish. If I'm looking for a short, I don't want to see a 15-minute chart candle that bullish, that close to the end of the candle. Nice little drop down maneuver here. Um, nice little drop down maneuver. Okay. So it didn't give me that nice little push to the upside. You know, the one that makes you feel like we're going to be going long. Like this one is the opposite. Like it's the one that makes you feel like you're getting short here. And then it drops down just prior to the end of the candle. And then we move down and then to the upside, right? Hmm. Think, think. What am I overlooking? Because I think I'm calling it. But when I start seeing both opportunities this clearly, yeah, I have to really, 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 really pull back for a second to see what I'm thinking of. This is up close wick. Drop down to the high of the imbalance. On the 5 minute chart, would we consider that a market structure shift, right? 130, down close candle. We moved down, we moved up after it, then moved down, failed to take the high. And what I talked about really sounded kind of ridiculous that We have the 70%, then we have this, 70, 70, no, 100% of the total wick, and then 79%, and then the 50% range, right? And then it sort of declines down the wicks of these two areas. There are 15 minutes left in the hour. I don't feel a need to rush this. I'll probably end up trading off stream where I can really kind of get crazy and yell at the screen and throw stuff. Um, but I don't really want to do that right now because it's really upset me that it didn't give me this entry, and it upset me because of this leg that would be a very nice portion for the day. And I would say, dang it, that was exactly what I was looking for. Time of day, 10:30. We started this process. Now, you see what attempting to do. I'm attempting to figure out how would I get involved then, right? But I've already given it this much room, right? So either we're gonna curl this rope right back up so that I can get involved, or it's gonna say, look, buddy, you didn't take on enough risk, right? You didn't risk enough. You should have had your stop, your entry here, and then you should have brought that 190 down to here or so, the 200 to there, and then you would have been smiling and profiling by now. Look what I did. Hmm. If we clear this down, close candle, we're good to go. I think we had a little bit on from that prior trade that would kind of mitigate this if we get stopped out. But let's watch, looking at this ES. I don't like how high into the body of this gap we are on the ES. And I'm also watching to see complete disregard for this down close candle as we move down past it. There's a decent amount of time in this 5 minute candle, but that in and of itself says to me that this candle can drop right down near its opening price and then just completely breathe its way all the way back up through itself. Buy and sell, buy and sell. I don't want to have anything to do with this candle if it comes back up here. If this 5 minute candle comes back up here, I don't want to have anything to do with it. I'd rather get out of the trade than try to gamble to see whether or not it was going to allow us to go along with it. I'm watching how this body is closed. Now watch this. Watch how this thing turns over. Stops there, turns over. And in half the time it took to get down and make this wick, right? And half the time it took to come down and make the wick, let's see what happens. All right. Down close on the ES. I'm watching, right? I'm watching the bodies and watching wicks, watching bodies, watching wicks. There's a small imbalance. We closed it, small imbalance here on the ES. This group of down closed candles. Let's see on the ES whether or not it's serving any purpose for today's price action. I want to see candle, candle forward. We never violated the mean threshold of those two down close candles. Although we did trade into this imbalance and we put a wick up, hit this up close candle, and then went back down, we're just looking to see whether or not it's going to offer any continuation to the downside. Any continuation. Or are we respecting mean threshold? And respecting mean threshold is fine. For us, what we're concerned about is what? We're concerned about whether or not it's just going to turn right around, pop right back up, and take us out of the trade. And then we're just like, ah. And so what it was is a mean threshold respect, turnover. The NASDAQ, strangely enough, I've always found it to be crazy, is this little wiggle to the upside on the ES represents an intense range on the Nasdaq. Always think that that's funny because you would think, oh yeah, I could measure the other, and then the two don't have the same sort of relationship. Now we still have this red line level, which represents what for us? We dropped down below that 15-minute high with 9 minutes and 48 seconds left in this candle. We were very conservative with the range that we allowed it because of where we are and the way that price is behaving at this point. Our initial entry was where? Our initial entry was right below 50% between these two levels. This is where our initial entry was. Here, this would not have triggered our entry, but we were below 50% right here in this area. This is exactly where we were. One, two. Okay. Now it slowed down right here as if it was saying, yes, Grady, this was that area. This was a significant spot and a space for you to get short. And it slows down. Now, I have to control my psychology because I'm seeing what I want to see. We traded to this 62% level. We dropped down below 50. We traded up. Yeah, I fell for it. Yes, I fell for it. Yes, I did. I fell for it. I fell for it. I fell for it. But I still need to put my stop loss where my entry was. But we hit that 62% level. And once we did that, and we went above it just that little bit, and then we dropped down below the 50% level of that range, I had to do it. I had to do it because I would not have been able to sleep at night had I not done it. Relative equal highs. All right, we have relative equal highs. We just ran here, teasing, teasing, teasing. The velocity that we went down, that we saw you like flash down and then pop right back up. Now we're back down here at that 50% level, and it's teasing us, right? Because why would it come into these levels and have high resistance liquidity activity? Because they know that, this is what we're looking at. $50 loss, $50 loss on this one trade, get out, save face, or we go. Perfect. Okay. I think that's gonna be it for me today. I don't really want to sit through this consolidation price action back and forth, irritate me. It's going to irritate that all the price action that we saw here was this falling down, falling down, falling down, falling down, falling down. And then all of it equated to a move up. And that's one of those things that I really do take issue and have issue with. Um, the relative equal lows, or the low that we saw taken here, and we saw it also taken here. I didn't take that really into account. I mean, I drew this level out, but to me, it wasn't as significant as the way price was breaking down on the ES. So that was my mindset, right? I saw price on the ES sliding, and it was respecting higher up close candles. This down close candle, when we got to that level and it respected it, and it did not take out the mean threshold, I was cool with that. So much that as long as we did not as we traded up to an imbalance or traded up to a prior area of interest here and then turned over and moved back down. So when we came up to take out these relative equal highs, I'm saying to myself, oh yeah, we engineered liquidity right above this flat level. We came up above that flat level, boom, turned over, and my expectation was us to immediately move down. We did not immediately move down. What we did is we just pressed through that level and we took out that prior 15-minute high, dropped right back in to the high of the last gap created. And I don't know what we're gonna do now, but even more hilariously, we could do this and then stretch this to that high. Now this is sitting directly on that 79% level. We've traded right back up to that 79% level again. Go through, go through it, go through it, go through it. Please go through it. If it respects this level, then I'm looking now over here at the ES and I'm saying, oh, okay, look at this, right? Don't try to catch the high, Grady. Don't try to catch the high. Yep. There we go. There we go. There we go. There we go. Okay. Woo! Okay. So what bullet are we dodging today? We're dodging the reflexive overtrading, revenge trading model of taking one or two decent trades, giving taking a small profit, giving small profit back, loosening up our trigger finger, and then beginning to just kind of spray at the chart. We're not in any area or structure that I really like. This is not my favorite trading area. Some people, when they see this setup every time, they automatically see, oh yeah, we're just going to trade down right here below that, take that out, hit this gap, and pop up. They can automatically see that. I don't automatically see it. What I see is that we've come to a higher time frame range. We are above consequent encroachment of a particular gap. We're in the premium low of that range. We just put a small pieces of bodies and wicks up here. Then, thank you, NVIDIA. I don't know why you thought it was time for that right now. Then we drop right back in. Now with this price action, I really do feel it now. Again, I'm going extremely small stop loss. Look at that small stop loss. It looks small on the screen, but it's not small in real life. And stop that. Okay. On that note, everybody, right? Be responsible for your own trade. Take accountability for the trades that you take, the money that you make, and the money that you lose. This is trading entertainment. Um, so I hope you guys have a great Tuesday. I hope you have a really productive day. I hope your trading and your trading strategy sharpens, and I hope your eye and your psychology focuses. And I hope that you're able to pull the type of profitability from the market that you've been working so hard for, right?